Hey guys, I am Perry,
And I'm Dennis.
and welcome to our weekly market recap session. Here we will discuss this week's market movement and events and that of the upcoming week. First of all, I hope that everyone is having a wonderful weekend after all these green days. Not much has changed since our last market session, as the key levels are still the same, though we are about to enter a very news heavy week which could have some great impact on the price of the coming month. Let's start our session by diving into our market overview. Let's take a look at the charts and total liquidations of this week. But first, let's jump back to the Friday the 20th of January real quick. Last week we broke above the 21.5k high resistance level, which as you can see here has been established since June 2022 and last touched on the 6th of November 2022. After getting rejected from the daily EMA 100 level, currently we have seen the price test this level at 22.3k multiple times this week and have flipped this zone into our current support level. Now by zooming into the 4-hour chart, we can see that the range in which we are currently consolidating with our old high range resistance level, currently being our local support at 22.3k and 21.4k, and our local resistance and premium zone being formed at 23.5 and 23.1k. Now by looking here at the total liquidation chart, we can see that Friday the 20th January, 235 million shorts versus only 21 longs got liquidated, around the high resistance level at 21.5k, which confirms the fact that people were expecting the rejection on this resistance level to be much stronger than it turned out to be, as we are currently ranging above this level and the daily EMA 200. And by looking at this week, the two most interesting days liquidation wise were the Tuesday the 24th and Wednesday the 25th. Tuesday the 24th of January we could see 173 million longs versus almost 21 million shorts getting liquidated. After the rejection of the local resistance level, which is a sign that a lot of people are in a bullish mindset, both hoping and expecting to see a push towards the 25k level. Wednesday, the 25th of January, we could see that a lot of shorters getting liquidated who were expecting the same movement to repeat itself. But nearing the daily close, we saw the price push above the local resistance, only to return back to where that push started again. This resulted in 151 million shorts versus 87 million longs getting liquidated. Further liquidation wise, the rest of the week isn't worth mentioning, as both sides are equal finding liquidations around the 15 million for each side. Now let's take a look at the volume and volatility sheet for a little bit more confirmation on the price action of this week. By looking at the volume and volatility sheet here, we can see that volume has stayed relatively stable this week, and the volatility also slowing down, turning back to normal, with a few strong swings here and there, with the price staying pretty much stable as well above the 22k level. With the volatility swing moving up, so does the risk of a strong retracement to establish a level of lower support, which until now still did not happen.
Bitcoin dominance pumped right through the daily resistance block at 44% in the first half of January. This push went hand in hand with Bitcoin pumping towards the 23k level. Bitcoin dominance rising along with the Bitcoin price was a good indicator that a lot of money was pouring back into the crypto market again and was ready to be redistributed to altcoins. This phenomenon was evident in the past weeks, with altcoins popping left and right. In the past week, however, Bitcoin dominance stayed relatively flat, testing the 44% daily level as support for a couple of times. For the coming week, this 44% level is still the level to watch. If Bitcoin pumps towards 25k, with Bitcoin dominance pumping from this level of support again, we could see some nice pumps on altcoins again in the coming period. However, if Bitcoin pumps with Bitcoin dominance declining, I would be very cautious longing altcoins, as that would be a sign of weakness regarding the power of this Bitcoin rally. And we all know the king of crypto decides the fate of altcoins. Of course, Bitcoin could also still retrace from its current price level, as Perry has mentioned numerous times. This goes hand in hand with a pump on Bitcoin dominance. Altcoins will dump intensely. After a steep decline in the first weeks of this year, Tether dominance started to stabilize together with the Bitcoin price over the last week. Chart-wise, Tether dominance is on high time frame support right at around 6.5%. It's still inside a big range which it was in since June of last year. The next big daily support level is at 5.8%. The last time Tether dominance was at this level, Bitcoin was trading at 25k. So for the coming week, the level to watch for Tether dominance is this big support block between 6.5 and 6%. A small bounce from here to the middle point of the current range would signal the big pullback on Bitcoin everybody is waiting for. Now for the global market recap. Stocks started last week at a critical high time frame resistance level and at the huge downtrend they were in for over a year. Partly due to positive earnings reports and a better than expected GDP figures, stocks rallied above the downtrend line. Both SPI and SPX charts managed to close the week above this price line as well. However, they rejected harshly at the drop-off point at which price tumbled down last December. This is still a crucial point to gain for the market structure to return bullish again. Next week will definitely show if this breakout was a fake out or not. This resistance point at around 4100 points on the SPI chart is the crucial level to watch, with the earnings reports of some big companies coming in next week. Together with the interest rate decision of the Fed, we will see some fireworks on the stocks charts. Speaking of which, next week we will see some interesting events that will definitely have impact on the crypto markets. The week starts off with the earnings reports of the big tech companies. Analysts expect a tough earnings season for big tech as they are struggling with declining sales and raised interest rates. High interest rates hurt big tech companies relatively hard because of the investments they have to make in order to fund their research and growth. On Tuesday, we will of course have the monthly close, at which the bears and bulls will fight over this important price level on Bitcoin. At the same day, the FOMC meeting will start, signaling the first of a two-day meetup of the Fed officials regarding the monetary policy. On Wednesday, we will get the definitive rate hike decision. An interest rate hike of 25 basis points is expected, bringing the rate to about 4.5%. On Thursday, the European and British central banks released their interest rates. Analysts expect them to raise their rates by a whopping 50 basis points to battle the stiff inflation that is raging in the European economic zone, which hit a peak of 10.6% in October of last year.
Now for our market prediction for the coming weeks. The 21 and 21.7k resistance has been one of the main resistance levels established since the dump from 31k to 18.5k, which started in the first week of June 2022. This breakout has been an important level as it has also filled the CMA cap, which is left in the first week of November. And we are currently finding ourselves between the 22.4k and 23k level. As you can see on the charts, this level has been a key SNR level in the past, making it a crucial point of observation for potential rejection or breakout movements. Until now, we have not yet had a support test, as we went pretty much straight up from the 16-17k support range towards our current resistance zone price range. It is possible and healthy to find a form of retracement soon to establish a lower support level to build strength for another movement up towards and above the 24.4k and 25.2k high resistance level. If there is a rejection at this level, it is likely to trigger a scenario where the CMA cap between 20.7k and 20k will be filled. This will result in an important test of support to establish a bullish trend and propel the price towards the untapped CMA cap during the second week of June 2022 between 27.4k and 28.9k. However, it is also very possible, with all the greed and FOMO right now, that we can see the price push towards the next resistance level, in which we will tap the 24.3k and the 25.2k level. With the RSI being above 85, pointing out that we are in a very overbought level. Last time the RSI was above 85 was in the beginning of January 2021, which started the bull run towards 68k. Full-on rejection from this level could turn the market bearish, as the chaos followed by a 20% Bitcoin price decline towards the CMA cap would push the entire market down by a great bit. Therefore, it is of a great importance for organic and healthy growth to see the CMA cap get filled sooner than later. My 3 potential outcomes for the current market trends are a breakout above the current resistance level, which could push the price all the way up towards the high resistance level of 25k. However, a possible negative side effect is that a pullback could be so dramatic that the entire market could come crashing down again, as we would move back towards the 20k CMA gap. Another outcome could be a rejection from our current resistance level, resulting the price to test the first level of support at our previous resistance level. This is a possible support flip, but this level needs to be tested first in order to positively turn into support. Now, the last outcome I have in mind is a rejection at our current resistance level, testing the first level of support at our previous resistance level of 21.7k and 21.2k, but failing to uphold the support could result in the 20k CMA cap getting filled and pushing the price down towards our current main support at 19 or 18k. So that's all for this week's market recap, people. Be sure to watch out for these scenarios and tune in this upcoming Wednesday for our midweek market session. In the meanwhile, be sure to check out our Twitter and Discord channels for more fresh market updates and content. See you all next week and enjoy your day.